Today, our stock analysis will focus on the firearm manufacturer Smith & Wesson, ticker SWBI. They recently completed their new headquarters and relocation to Tennessee, so the expenses associated with that are in the past and free cash flow should begin to tick upward. So let's take a quick minute and look at their financials first. And starting off at the top with revenue, 2024 was an improvement from the prior year, but still, it's one of the lowest over the past decade. Next, net income and earnings per share having slightly better results than in 2023, but far from some of their highs in previous years. And both net income and earnings per share are slightly lower than they were 10 years ago. Next is dividends, which they began paying in 2021, and they've been increasing it every year, and it's up more than 200% since their first dividend. Then share count, though 2024 is slightly higher than 2023, but from 2015 it is down more than 15%. And lastly, free cash flow, returning positive from a negative in 2023. And now that the overall majority of those expenses with the new headquarters and relocation are in the past or been paid, I'm expecting free cash flow to greatly improve moving forward. So let's jump down now and perform a stock valuation. Here's a valuation setup, and we will look at a few scenarios. But first, I want to point out up in the top right-hand corner, the net income and earnings per share CAGR over the last 10 years, slightly negative, and we did notice that when we looked at their financials. But for this first scenario, I am using a 3% short-term growth rate, and that 3% is trying to match about what the Fed's target rate of inflation is, and using that for the next 10 years with a 10% discount rate and a 2% long-term growth rate. I am also using a 70% margin of safety. And with that, that brings our intrinsic value to $23.67. And with that 70% margin of safety, brings it down to $16.57. Now, the stock is currently trading around $14, and maybe about a month, 2 months ago, it was up in that $17 range. Now, though the price or my valuation is $16.57 and the stock is trading lower than that, I already own a position, so I'm not going to add to it. But on the earnings call recently, management did indicate that they are expecting probably a growth rate in that higher single digit range. So we're going to change that 3% slightly higher. We're going to go 6.5% and see how that impacts the valuation. So with a 6.5% short-term growth rate, the intrinsic value jumps up to $30.92, and the margin of safety of 70% brings it down to $21.64. Now, the stock did trade in that mid to high $20 range several years ago, so it's not unlikely that it can get this high, but they need to show some positive results in the coming quarters to get up there. Now, let's look at one other scenario. Let's just presume zero growth for the next 10 years and see how that impacts that valuation. So with that 0% short-term growth rate, the intrinsic value comes out to $18.93. And with that 70% margin of safety, brings it down to $13.25. So slightly below where it's currently trading out in that $14 range. Now, if I didn't already own the stock, I might be buying into it now. But as I said, I already own it, so I'm not going to add to my position. But let's look at a few other data points before we move on. And the first is the PE ratio, so 16.35, so not too bad on the PE ratio, though in the past it has traded much lower than this. Then long-term debt to free cash flow, I like seeing under 3. We can see there 2.1, so good sign there. Controlling their debt. As we mentioned earlier, dividends, they began paying these a few years ago, and since then it's up 220%, and the current dividend gives it a 3.7% yield. Share count slightly down over the past 10 years. You can see down just more than 16%. And then net profit margin over the last 10 years, just above 9%. In the last 3 years, about 12.5%. So good sign there on net profit margins. I like to see 10% or higher. And one other data point I always like looking at is return on invested capital. Again, I like seeing 10% or higher. See, they've been above this. They've been well above this in that 20% range, though the 1 year slightly lower, 8.6%. So not too bad, but hopefully they can get that a little higher in the coming years. So as I mentioned, I already own the stock. So let's move on, and I'll show you all my purchases into Smith & Wesson. Here are all my purchases into Smith & Wesson, and I started this position back in late 2021. We see those initial investments are down, and especially compared to the S&P, I am down quite a bit. But later on, I did buy in again back in late December 2022 and into 2023. You can see those returns have been a lot better and actually beating the S&P. And overall, with dividends, I am up 10.9% for Smith & Wesson, though if I would have put my money into the S&P with dividends, I'd be up 30.8%. Now, I was doing a lot better a couple months ago when the stock price was trading $17 and even higher. I think I was slightly beating the S&P, but when the stock price fell now to about $14, this is where I currently am. We can see the last time I bought in was back in September, and that return is just below 29%. You can see my total investment here. So I probably put in around $17,000 or so, give or take. And overall, with my returns on stock appreciation, just above 7%, the current valuation is just below $20,000. Now, depending on how the next couple of quarters go, I am thinking about liquidating this position and moving on from it. But I do think we can get back up at least into that high teen range. But again, you need to show some better results on their quarterly earnings calls. But let's move on now and look at my overall portfolio's performance next. Here's the portfolio's overall performance, and I will point out a few of the investments. First, Smith & Wesson in the lower right-hand corner, and it is one of my smaller positions. Next, Berkshire Top Center. I've owned this for a while, and I did sell some covered calls in my tax advantage account, and that is the gray box, which shows that the option was exercised and I was forced to sell. But I will look at buying back into Berkshire in that account when the stock price drops. Next, Tesla had a great week, up more than 20% and more than 40% for the month. And the last one we'll look at is Palantir. The stock price got above $27 yesterday, though I'm not sure how long it can maintain that level, but I do plan on holding Palantir long term for at least 5 years, most likely longer than that. So I hope you enjoyed this video, got some useful information. I'll see you next time. Thanks for watching.